So title for the session today is my options investing journey. If you have attended my session before, okay, I always start with an investment objective. Before you invest, before you put money out from your pocket, always ask yourself, why are you investing in the first place? Investing is risky. So my objective is very simple, very common. A lot of people have this objective, which is financial freedom. Financial freedom. And what is financial freedom? When you have passive income covering your expenses. And down here, we define as passive income. We define passive income as income not from work, not from your 9 to 5 work. So income more from investment. Passive income can cover expenses. Then in that sense, basically, I no need to go to work. I still can survive. I can financially free. So this is my objective. I think quite common. So to achieve this objective, what we must build is passive income. Passive income. I have been very focused on building passive income throughout my investment journey. So what are some of my passive income I have now? Of course, things like CPF Life. Okay, I'm quite sure these are most people have. CPF Life, by the age of 65, you would have money coming in from CPF. Okay, but of course, I hope to retire earlier. I don't want to work until 65, right? Okay, that's what other people want. So I'm also into annuities. So it's an insurance product. So I will actually start getting my annuities at about 60. Is it? Yeah, about 60 years old. I will actually get my annuities. So again, money coming in from insurance. Then of course, we still want to invest. We still want to actually retire earlier, even earlier than 60. So I am, in fact, most of my money is actually into dividend stocks like blue chip and REITs. Okay, I have actually built quite a decent sized dividend portfolio, whereby I'm actually getting regular dividends. Okay. So of course, if you actually go into Singapore REIT, Singapore REITs, Singapore dividend, you should be expecting about 5-6% dividend yield, 5-6% dividend yield. Then the question here is this, is there any way to increase the yield? So in fact, I have been on this journey for, I would say, the past 3 to 4 years, thinking about, hey, how do I actually increase the yield so that, of course, I could even retire earlier. So one thing I did is this thing called margin on REITs. Some of you may actually know about this, whereby I actually borrow money to buy REITs. Then my yield can go up to even 10-12%. Then another thing I actually chance upon is actually this thing called options. Options. I always thought options is a trading instrument until I met my mentor, Seong Yo. I'll introduce him a bit later. They said, no, from options, you are also able to generate regular income. After learning from him, wow, actually quite true. But, as a professionally trained investor, I'm not someone that, trust so easily. I must test first. So in fact, I started this testing journey last year. In fact, May last year. Later, I will show you my results. And today, I'm actually convinced that options can actually indeed give regular income. I have some results to show you. Okay. And of course, in terms of return, is actually quite spectacular compared to the rest of my instrument. We are actually looking at about 20 to 30% yield. Okay, 20 to 30% yield, of course, at the expense of higher risk, and it's less passive. You definitely have to do more work. Okay, life is very fair, high risk, high return. And yep, later I can show you the results. So at least for the last year, we actually achieved about 20 to 30%, which I think is possible to repeat. But hey, my disclaimer is there. Okay, and okay, past performance cannot guarantee future. Okay, but I have sort of like tested myself. It's actually a possibility. Yep, so I have actually stumbled on options. So throughout this session is really about what I have experienced over the past 1 year. Okay, obviously, I'm going to talk about the good thing. I'm definitely going to talk about the bad thing as well. End of the day, what we really want to achieve here is this, is really for you as a reference. Is this an instrument for you or not? Okay, we don't believe that, there is this thing called the best instrument. Okay, yes, in terms of returns, so far, this options is generating higher returns than the rest of my instruments. Okay, but doesn't mean the highest return is the best, because I'm also taking more risk. So for options, theoretically speaking, you can even lose more than what you invest. Okay, I'm also putting more effort. Okay, so like for example, for my dividend stocks, I take time to analyze. After buy, I put there, I do nothing. But options, you need to do a little bit more work. So really, you hope you all can actually use this opportunity, since you're going to spend the next 1.5 hours with us, okay, to actually see for yourself, see whether it's option something for you. Since a lot of you are already in stocks, see whether you want to progress the next stage to go into options. Okay, disclaimer. So very important. Again, I am a professional educator. I teach for a living. Okay, so what I really want to share here is really education. If I happen to mention some company names, it's just as an illustration. So long story short, make money, be happy, lose money, don't scold me. Okay, for those, if I'm meeting you for the first time, thank you for giving me your 1.5 hours. You are investing 1.5 hours in me. I really appreciate that. My name is Emin. I'm an MD and founder of this company called Invest Coach, with the vision of everyone makes sound investment decision. Okay, so that's my company vision. Everyone makes sound investment decision. I used to be a corporate investment guy. Okay, then I realized I think my skill is actually being more treasured in the retail investor space, because actually I see a lot of people when they invest, they are not too sure how the instrument make money for them. And really, some of them don't even know why they invest in the first place. Also, this is why I started this company. Everyone makes sound investment decision, whereby you know exactly why are you risking your money for, and you know exactly how this instrument can bring returns to you. So I am now a regional investment speaker. Ironically, during the COVID period, I actually speak more overseas in the comfort of my home. And of course, some of you actually know me as a resident trainer for SGX Academy. So today, in fact, the star for today is my Sifu, Seong Yo. Okay, I'm so glad that I could get him to kind of talk today. So of course, having invested options for 1 year only, so what I know about options is actually still quite primary. Okay, definitely not good enough. So I'm actually glad to have my Sifu here to come and share his options. So why I actually decided to learn from Seong Yo, because he is really depending on his not just career, his family on options. He is a full-time option investor, and later he will share he actually have quite a big family. He's actually using options for his daily expenses. So I'll leave it up to him to let me share the story. But yes, I'm learning from Seong Yo, and yep, that's the results that we have created together. Okay, before I go into my story partner, I think I need to set some give you all some basic knowledge, set some background, just in case there are people who don't know what option is. Okay, of course, later I'll actually also invite Seong Yo to actually talk about the process that we have went through. Okay, then I'll show you the results. So this is how the flow goes. If not, I just tell you the story. You may not have some background. So as per all my webinars, hopefully you all get to learn something. Not just come here, listen story, be entertained, but really learn something. Or something to bring away from this session. Okay, so I'll just start by explaining what an option is. Okay, so I do understand that we have some friends may not be that familiar. Okay, now, in fact, most of us have actually dealt with options before, especially if you have actually bought a property before. Now, can someone do me this favor? If let's say, for example, you want to go and buy property today, you see the property you like, then you tell your agent, I want to buy this property. Okay, the agent will actually give you this contract. So what is that contract for you to sign called option to purchase? Thank you so much. Okay, so option to purchase. So that option for the property is exactly how the stock option works. The mechanics is the same. It's the same thing. So basically an option is a contract that give you the right, if let's say you're the buyer of the contract, give you the right at a certain price, at a certain time, to buy or sell the underlying instrument. Okay, so it's a contract between two parties, okay, buyer and seller, that give you the rights, give buyer the right at a certain price, at a certain time to buy or sell the underlying instrument. So in the case of the property, so this is what happened here. If I'm the buyer, I sign the option to purchase, I have to pay an option fee. Then I'm actually given 2 weeks to go and raise money for the property. And if 2 weeks later, if I so decided that, okay, I don't want to buy the property anymore, can I just simply walk away? Yes or no? Thank you so much. Yes, as an option buyer, you can just walk away. Of course, you forfeit the option fee. Okay, but if I've so decided to proceed, if I so decided to buy, okay, the seller, can they say that, no, I don't want to sell to you anymore? Can the seller do that or not? Yes or no? Can you simply walk away? Thank you so much, Cheng Yong. No, thank you so much. No. Okay, so this is how an option works. You have a buyer and seller. The buyer has the rights. The seller has the obligation. Okay. Now, so let me just bring it to the stocks example. I need to introduce you to the 4 basic operandi of the options. Okay, then you will have a clearer picture of how it works. Okay, I have this example here. So let's say we had this stock called Orange. The stock is now selling for $55. And Xiong Yu, so let's say we have Xiong Yu here, who is actually selling the option at $5 with a strike price of $50, time to expiration 1 month. So what happened here is this, if you actually buy this call option, you have the rights to buy the underlying instrument within the next 1 month at $50 from Xiong Yu. Okay, that's what it means. So again, so let's say we have underlying stock called Orange, current price is 55. Okay, but instead of buying the stock, you can actually buy an option from Xiong Yu. Okay, you pay him $5 and you have the right to buy from him at $50 within the next 1 month. Okay, so eventually, if you actually want to be an options player, so this is one chart you need to understand how to read. This is what we call the payoff table. The x-axis is the price of the underlying stock. The y-axis is the profit and loss. Now, so this is what happened here. If let's say the price go up to $70 or $75. So after you buy the options, the price go up to $75. So what's going to happen here is this. What will you do? You will actually run to Xiong and say, hey, Xiong Yu, I have this contract from you. I can actually buy from you at $50. Okay. Then after that, you can actually immediately sell the stocks to the market at $75. So in that sense, you actually make $25. Okay, so that's how the option works. But after, if you enter into the option, so instead of increasing, the price actually drops. Let's say drop to $30. What's going to happen? You are just going to let the option collapse. You're just going to let the option lapse because it doesn't make sense for you to go and buy from buy the stock from Seung Yue at $50 and sell to market at 30 doesn't make sense. I'll be losing $20. Okay, so with this option contract, this is what happened here. You sort of allow you to have unlimited profits if the price go up and to cap your loss compared to if you buy a stock. Okay, if you buy at $55, the stock, yes, price increase, you make, okay, price drop, you will actually lose. There's no cap. Okay, but in this case, you can actually cap your stock, cap your loss. Okay, that's one. So the other thing is this, if you realize there's also a leverage effect. So let's say, for example, I buy the stock at $55 and I sell at 25. Okay. So in terms of return, it's probably about 30 to 40%. Correct, right? So $20 divided by 55. So it's actually about 30 to 45%. Okay, but if you're to buy an option, you only pay $5. Okay, but you still make that $20. So $20 over that $5 you invested, your return is how many? 200, 300%. Okay, pardon my maths. I'm not very good at mental sum right now. Okay, so can you see? Okay, not only you have your loss capped, but in terms of returns wise, okay, there is a leverage effect. Now you can also buy a put option. Okay, put option. In this case, you have the right to sell the underlying instrument. So for call, you have the right to buy the underlying instrument. For puts, you have the right to sell the underlying instrument at a strike price. Okay, now, so in this case, this is what happened here. You have the right to sell to Seung Yue, the stock orange at $50. So question here is this. If let's say, for example, the price actually dropped to $30, price dropped to $30, will you be interested to actually buy from the market at 30 and sell to Seung Yue at 50? Yes or no? Okay, thank you so much. Of course, it's a yes. So conversely, if let's say the price go up to $75, okay, you will not want to go and buy from the market at 75 and sell to Seung Yue at 50. Okay, doesn't make sense. Then what you do, you actually let the option lapse and your loss is just the premium, $5. Okay, so this is a put option. Okay, so of course you buy a put if you think that the market is going down or either I think that price will actually drop. Okay, now the interesting thing about option is you can also be the seller. You don't necessarily have to be a buyer. Anyone can be the seller. Okay, doesn't mean that you need to be an institution. You need to be someone experienced. No, anybody can be a seller. Okay, so of course the whatever the buyer makes is the seller loss and vice versa. So you can actually do this thing called a sell call, whereby, okay, if let's say the price actually drop, okay, you can sell call. Then what happened here is this: you actually collect the premium of $5 here. If the price actually drop, okay, nothing happened. You just collect the premium. But if the price increase, you need to deliver the stock. You need to deliver the stock. And of course, you can actually suffer unlimited loss. Okay, it's potentially you can suffer unlimited loss. Okay, now I just want to highlight something important here. So let's say eventually you want to invest in option. Okay, there's actually this saying, never, 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 never go naked. So this is what we call selling a naked call, whereby you just sell the call and do nothing else. Okay, so never, never, never go naked because your loss can be unlimited. Very scary. Okay, very scary. Your loss can be unlimited. Okay, so you do this when, of course, you think that market is actually going down. You collect the premium. Of course, you can sell call. You also can sell put. you can also sell puts. Okay, whereby, okay, if let's say after you sell put, if the price actually goes up, or either that stay within a range, nothing happens, then you just collect the premium. And if the price actually drops, okay, a price actually drop, you have the obligation to actually buy at the strike price. Okay, so of course you do this when you believe it's an up market. So these are the 4 basic operations of options. Okay, buy call, buy put, sell call, sell put. Of course, with this, we can have a lot of different trading strategies. I will just stop here for a while. Then, of course, I'll just pass on to Seong Yo, who actually share a bit on the process that he has actually helped me to adopt for me to actually generate my returns. Okay, before I show you exactly which of the strategy that I actually use to actually give me that recurring return.